there's this whole debate about there are so many definitions of what a core is in a core system. So I went to Wade Arnold, and I was like, here's my definition. And he went, yeah, I agree with that. And I was like, oh my God, I think I passed the test. Do you know where core in core banking comes from? And it comes from computerized online real-time environment. And it's just any computer that you use that does real-time 24/7 like processing of things that were built around the branches. And I'm like, oh, that's where that comes from. And so there's this whole debate about there are so many definitions of what a core is in a core system, but it just stands for a computer.
But that's the most like fintech finance, well, not fintech thing. That's the most finance thing that could exist, right? Is take something that is very straightforward, manipulate it in a fashion that the average person cannot in any way understand it, and make it so complex that you can't reverse engineer any of it. But
the other thing with this industry is people walking around saying core and core banking, and I'm pretty sure most people have no idea what they mean. So I went to the true source. I went to Wade Arnold, and I was like, here's my definition. And he went, yeah, I agree with that. And I was like, oh my God, I think I passed the test.
Do you remember your definition?
Yeah, so I just did concentric circles. So the middle concentric circle is a ledger. So this is like Zach has $10. It's just the accounting. Around that is the payments engine, which is payment against ledger. So double entry. Zach has paid Simon $10. Zach now has less. So that's the second layer. And then around that, you get treasury and regulatory reporting, which is, okay, well, the bank has this much, but Zach has this much, but we're buying these shares, so treasury. And reg reporting is, I'm going to tell the OCC that I did those things. And then outside of that, there's like a million other things that it could do, value-added services. So that's like my concentric circle model of core.
And it's a really good description as to why that whole thing is getting unbundled and has been unbundled and is now getting rebundled. I guess I was like 5 years off in my framing of that is now being rebundled into a whole different thing. And by the way, welcome to Everything's Fintech. My name is Zach Anderson Pettet, VP Fintech Strategy here at Money 2020. This is Simon Taylor, and we're going to keep talking.
Yeah, let's go. It's just core banking, man. And what was it? Ben Thompson said, life is a constant stream of bundling and unbundling.
Yeah.
And you can see this in consumer banking at the moment, right? Like the neobanks, especially ex-US, but even at some point, like the PayPals and the Venmos, like, oh, look, PayPal's got its mojo back. Venmo's becoming a thing again. They're rebundling everything. But, like, look at Revolut and look at Nubank. What can you not do? You can buy an eSIM with Nubank. Like, what?
Nubank's one of the crazy. I mean, it's in the top 5 coolest fintech companies on earth. That's a fun thing that we should. What are the like the coolest fintech companies you like? Like Nubank is obviously up there.
I'm sorry,
so impressive.
But, you know, like it's not just the impressive, but like their marketing is on point.
The shipping velocity is crazy. I think it was Emily Mann just posted something with like one of their. I can't remember her name. I'm sorry, but one of the product leaders from Ramp that has been involved in like every major launch they've had, and like her secrets of it, and it seems like the culture is all like what Eric and team have been able to do there is quite impressive.
So I interviewed him for the Brain Food podcast, and the difference, I interviewed the CEOs of Ramp, Brex, and Mercury side by side just to compare them, and the crazy difference was the who the customer is and the philosophy. So why can Ramp ship so fast? Because they've not built a lot of infrastructure. It's all partners. It's all APIs. So it's like built on Stripe. It's built on Increase. It's built on and.
I did not. I probably just not supposed to admit that I don't know things, but I didn't know it was built even on top of Stripe. That's like. Continue.
Go look at the Stripe issuing page and who the logo is on that Stripe issuing page. So like this. But Eric tells you that in the interview. Like it's not like it's a secret. Yeah, it's just like. But I wanted to get at that. Like, tell me what your stack looks like. Then interviewed Pedro from Brex, and he was like the other way around because they started before Stripe did issuing.
Right.
So he's like, well, I had to build this myself. So I've got like, Marqeta does my cards to some extent, but I've also got a lot of that stack in house. But what that means is it's a lot easier for me to go to new markets with the stack I've got than it is for Ramp to go to new markets who are mostly focused on the US. And I was like, interesting. So that's why DoorDash, who's in 50 markets, is a Brex client. might like the ramp product, but they also can't get that enterprise stuff. And then I speak to Imad from Mercury, typically all dudes, but go figure. And he came at it from like completely the other place. He goes, I partner a little bit, we build a little bit, but I just come from like, this should feel easy.
He's very practical.
Yeah, it should just feel like a really easy product. And he's not starting with the expense cards. He's starting with the account and saying that becomes a platform for everything else. And I was like, man, that's why you're all successful doing different things. It's kind of why you can learn from everybody.
Yeah, and the idea, this whole conversation about like who's going to win in the corporate card games or something. It's like, this is the big, like, this is a large market.
Yes.
This is a global market. This is not a winner-take-all market. This is a multiple winners market, and I think it's just the incorrect question. And I think it's true across fintech. I think we try and pick single winners on a lot of things that are huge markets.
It just makes for better content when you try and make it that way. It's like, who's going to win in the like B2B card wars? Yeah. Call something a war and people click.
Yeah.
It's crazy.
That's... one of the things I wanted to ask you about, this is a total tangent and separate, but...
I'll take the left turn.
Yeah, let's do a left turn. So I wanted to obviously talk to you about AI. I want to talk to you about some blockchain stuff at some point, but I think the
stablecoins now, it's not blockchain anymore.
Are we not saying that anymore? Okay, my apologies. Digital asset infrastructure. What is the actual correct vernacular at this point?
There's no correct vernacular.
Okay. It doesn't feel like there is. That's why I'm like dancing. I don't even just say crypto. I say crypto and digital asset, and then I mumble like 4 other things at this point.
It depends who you're speaking to. That's the issue.
Right.
It's the marketer's nightmare, that whole topic. But stablecoins are safe.
Yeah.
Like you can say stablecoin, and people don't even think it's crypto. Like it's.
But that's that encompasses one very specific thing. But does that is it actually the right? Well, depending on the sentence, it could be the right term. But I feel like there's a number of cryptocurrency infrastructure and cryptocurrency terms that are misused just based on the sentence structure or something like that. Like I got yelled at once for saying crypto instead of cryptocurrency because crypto is just short for cryptography, and like that doesn't. I was like,
wow.
Okay, that's awfully specific, but I don't know, whatever.
Everybody has. It's like core banking.
Yeah,
right? Like
the
difference. What does it mean?
Core versus
it's like what's the Rorschach test where it's like an ink blot, and do you see a butterfly or do you see Zach?
Yeah,
it's like Zach is a butterfly.
I see myself all the time. Yeah, that's all I see.
Everywhere I look, there's Zach.
Okay, so here's the question, and it's a big one, and I don't expect you to have an answer. I just expect you to have thoughts. So Trump, this guy, recently elected, just to fill you in, and will likely do some deregulating, right? And already has started to do some deregulating. And the reason we're sitting here in London, I've been here this week doing bunker days with the content team. And one of the questions that continuously came up is, as the U.S. aggressively deregulates and opens up doors to things like cryptocurrencies and all the underlying stablecoins, everything associated within it, and TradFi-wise pulls back probably a good amount, like, does Dodd-Frank exist in a couple of years? Does, I don't know. Like a lot of the things that existed to avoid another housing crash or avoid, yada, 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 probably are getting rolled back soonish. And then you have the EU, you have the UK, and y'all are just like responsible and shit. You're very consistent, like you're very concerned about the safety and soundness of your system. You're concerned about the safety and soundness, or not soundness, but safety of your consumers. Like you care about people, you're concerned about and you're going to be probably a little less aggressive over the next 4 years than we are, right? And it's all like we're functioning in this irrational, from my perspective, a somewhat irrational state, expecting this to actually turn out like incredibly well. And you all are going to be rational and think long term about it. How does a rational actor like the UK, or to overgeneralize like the EU, compete in an irrational world?
It can't.
Okay.
It's just no, you can't. You got to find what you're willing to do. The thing that's been happening in the UK for a little while, I think we lost our mojo somewhere around Brexit, and we're just dangerously close to thinking about how to get it back.
That's so British. Not getting it back, thinking about how to get it back.
Yes.
Yeah, okay.
So there was a whole move under the Sunak government around bringing back the competition mandate of the regulators. So for those not familiar, the UK has 2 primary mandates. One would be our equivalent of safety and soundness, and the second would be competition. So that competition one kind of fell away post-Brexit. And you see this sort of like, oh, Revolut's bad, Monzo's bad, innovation's bad, it's harming customers, there's too much AML, fines. And the bank lobby did a really good job of painting innovation as bad for consumers. And it should be safe for consumers. We do want a level playing field, but also we do want innovation and we do want competition. And so that started to come back the other way. I gave a talk to the House of Lords Financial Services Committee back in October.
That's just a cool sentence, by the way.
Isn't it?
Yeah.
The House of Lords.
Well, and just like I gave a presentation too, that like, damn, son, I love it. It's a weird life, I know.
It's everything British, though. You're in a weird room where it's a bit cold. It doesn't feel as grand as presenting to the anything in America,
This takes us back to the conversation we were having before we started recording, where I said yesterday I was standing in a square in London, and I was like, I feel like this is supposed to feel much more special, but like I'm still me and I can't escape me, so it just kind of feels like the world.
London has great marketing, but the reality is just like it's a bit
chilly.
It's a bit cold, but never too cold.
No, right in the middle.
So the competition mandate coming back is, I think, how you do it. So what was the superpower? What was the competitive advantage of the first wave of London fintech?
Yeah.
It was really thoughtful policy innovation. I would argue that the UK gave the world open banking regulation, and in doing, it legitimized the idea of open banking in a way that it was yoddly before, but became Plaid.
Yep.
And the US, typical US, the private market, Plaid is way more successful than anything in Europe. Like, it is crushed in the US because it built a great product in spite of a lack of regulation, not because of it.
Yep.
And so you end up somewhere in the middle. So now what the UK has to figure out is how it commercializes its policy innovation. So pound for pound, the UK is really great at two things, as has to some extent Europe, but certainly the UK. Really, really good at the cutting-edge science that comes out of Cambridge, Oxford, F1 cars. Most of the F1 teams are based in the UK. That kind of cutting-edge stuff we're really great at, but we don't commercialize it. It gets commercialized in the US. So we've got to figure that out. And we've got to move an awful lot faster. The US, on the other side, I think, whilst the UK needs to move faster and it's good at seeming sensible, it needs to be a bit more aggressive and go faster. The US is very good at seeming like it's aggressive, but if you look at the first Trump administration, a lot of the policy stuff that came out wasn't that wild. Maybe you could argue, were there some consequences around, the caps on, sort of 250 billion versus 50 billion for the Basel III rules and safety and soundness.
If you take the social stuff out and you take his personality and you take away some of the things that are said on Twitter, especially taking the social stuff out. It's like he's not that nuts. That's the crazy part about it.
In financial services.
Right. That's in this vein. Sorry. Let me be specific.
Within financial services, the policy of 2016 through 2020 doesn't look, especially on a global stage, like you compare it to Singapore and you're like, well, it's not that crazy. In a US context, because everything has to be argued about and be pushed to an extreme.
Yeah, we can't have a middle ground. We can't have agreement.
You can't be like, well, that was quite sensible.
No.
You've got to
we don't even
run
use
to
that
the
word.
exact opposite. And I would argue that the lack of crypto regulation has been more net harmful to consumers than the passing of any of it. And the fact that you can get away with outright grift and meme coins is because nobody's come along and passed something around stablecoins.
Right.
Nobody's passed something. The rest of the world already has. And, even the UK is dragging its heels. Europe didn't get it right. But you look to Asia and you say, yeah, you can do business in those worlds.
Yeah.
And you are better giving it a framework. And what that does is it allows financial institutions to come and bring liquidity into it to make it successful and to make it really succeed. So it's one of those annoying things where many things are true at once.
Right.
And you're like, you really want to reduce this to a binary argument because it's going to drive clicks. But can we have some nuance and some complexity? Can things be multi-dimensional, please? That'd be nice.
So it sounds like you have... One of the things I'm somewhat convicted on is that the idea of doing this significant amount of deregulation will lead to some version of another financial crisis at some point within the next, 8 years, something along those lines. It sounds like what you're saying is there's actually a best case scenario, a better case scenario in which he's not as crazy as everybody quite thinks, and he has actual adults in the room with him, and we're going to actually get to a pretty rational middle ground, maybe.
I hope so.
I hope so too, but I haven't
I'd
believed
say
it much.
I have a higher confidence of that being the outcome,
Yeah.
and than not. And the reason I have a higher confidence of it is one. I don't think the global financial crisis was just caused by deregulation. It was caused by a lot of other factors.
Yeah, totally. But my point is, like, removing a lot of those regulations, does that push us back into
But
that?
what goes in their place? Like, regulation in and of itself is not a bad thing. We see it as like a KPI or a threshold of like how much innovation is allowed versus how. And I think that's the wrong question. You just swap one kind of risk for another.
Yeah.
So what we've done, not successfully in Europe, but in the US, is credit creation has all moved to Apollo and Blackstone. And it's all still getting lent. Like there's probably a private credit systemic risk issue building up on the lending side that nobody really wants to talk about that's happening right there. Whereas in Europe, that didn't happen because the regulation was so tight. But also, have you looked at the European economy? You need credit in the system. So what are the consequences on public health, on standards of living, on, yes, the idea of public health care? We can't afford our public health care anymore because we don't have a functioning economy.
Right.
So you need growth in the denominator and you need credit for that. And by trying to push risk out of the system, what you do is you push credit out of the system and you make people's lives worse.
Yep.
So there has to be a balance to be found here. You have to accept some amount of risk in the system and you have to be able to adjust to it. Now, what's being said by the US administration is that they're going to take a more principles-based approach to regulation, which is essentially what the UK has. So if you go there, you would kind of be in a similar space to where the UK's been for a while, and you can tweak the dials, because the UK has had principles-based regulation for 20, 30 years.
Yeah.
But how that gets examined is what varies.
Right.
And that's a whole other topic.
Yeah. Well, I mean, yet again, politically, the politics of it all are influencing everything else, and our two overgeneralizing nations are running in opposite directions of each other. And it sounds like, in terms of like thought process and ethos, and it sounds like meeting in the middle is the answer.
Isn't it weird that like an arguably more left, more liberal Labour government is pushing so hard for growth and deregulation? And it's not just in financial services. They're doing this around planning and lots of other areas in the UK. My question is not, is it the right thing to push for? I think it is, because we, through the sort of 20th century, introduced a lot of regulations because a lot of things went wrong.
Right.
But we never garbage collect those regulations. There's no way to upgrade them.
Yeah.
Same with law. It's very hard to garbage collect law without passing a new law that does it. And you see this happens quite a bit in the UK system. We'll pass a new law that deals with an old one. But it's so slow. So you need this space for the ability to move quicker, but not the ability to just remove, but the ability to upgrade. If you are working today in modern software engineering, upgrading your software is something you have to do because the world changes around you.
Yeah.
The software of financial services regulation is law, and that's very hard to change, and rules are very hard to change. And I get that you need public comment, and these things are complex, but we need the ability to upgrade them in order to move faster.
So much of that's a politics conversation. I'm curious, how much do you think that we, and this maybe is a little bit of a transition into Sardine, have we taken advantage as a fintech ecosystem? Have we leaned into taking advantage of the supervisory technology opportunity enough from your perspective?
I mean, short answer is no.
Cool, me too.
I can't think of many examples.
I can't think of, like, Hummingbird.
Yeah, but even that's not
It's
supervisory.
not really, yeah, I know.
No, that's RegTech.
Yeah.
I imagine if
Maybe Palantir has something we don't know about.
Well, so that was going to be the thing I was going to say. Is
Okay.
I imagine Palantir as being like chiseled to do some of this work, but public sector procurement is just atrocious. It's really poor. I mean, if you've ever worked in the public sector as a civil servant, like it's impossible to get new tools, and the amount of people that know how to get into that are unbelievable. The tipping point to transform large organizations like governments and old legacy financial institutions is their procurement division, because nobody knows how it works except like that one guy that works for McKinsey, who secretly knows where the bodies are buried. Like that's their whole purpose in life, is they know how to get things through procurement. And That is an unbelievable opportunity for all of this innovation in the private sector to make a meaningful difference. So, yeah, it gets political, and there are probably things that are odious and that give me a lot of heartburn. But the idea of using private sector innovation in government is not something I have any particular issue with if it creates the right outcomes.
Tell me another way that we get anywhere closer to solving anti-money laundering than, like, if we don't start having private technology sold into government. Like, from my perspective, that's the only way that we're ever going to get smart enough to even come close to fighting more than 1% of it in a year.
They need to put the picture together because the private sector can't. And there needs to be actually a public-private partnership because the issue is it's very easy to hide in the shadows. It's very hard to bring light to them because by default, you don't know where they are. And so, like, everybody in the ecosystem, they've got, like, cone vision. They can only see their transactions. And the best way to solve it is with somebody that can collaborate with them and put the picture together. So if you think about this from a government perspective, a lot of what they're looking at is just a PDF report, which was the standard they had from decades ago.
Right.
How the heck are they supposed to put the picture together to give to law enforcement to go do something about it? So they need it. But also, there are probably 5 other bits of data in 5 other different institutions that if you put those together would make a bigger picture. That's why I think what Plaid's doing with Beacon is smart. It's what we're trying to do with Sonar. And frankly, one of those needs to exist, right? Like, many of them need to exist.
It's possible, people. Will you define those? Talk a little bit more about what you're trying to do with Sonar and just explain it a bit more. I think the average listener might not be up to speed.
Oh, yeah, good point.
we dive deep into jargon. We dive deep into all of the things, and we assume a lot. So
yeah. So Sardine. I was talking to you, not an audience.
Right. I know. I've kind of forgot about them too, but they're hi.
So Sardine, primary mechanism of detecting anti-money laundering and fraud is users' device and behavior on device. So I'm looking at how Zach's using his device. Oh, wait, it's been stolen. So whoever's using that device is using it differently to how Zach would normally use it. Oh, and by the way, it's on a flight to China. That's really strange. Zach doesn't typically go there at this time of year.
Right.
So that's a really powerful anti-money laundering fraud risk signal. 2.2 billion devices on Sardine gives us really clear views.
That number's grown a lot. That number grows every time I talk to you, very significantly.
Well, and it's one of the best bang for buck signals in an age of deepfakes where you can get through somebody's KYC, in an age of scams where you can create scams on ChatGPT, phishing where things go wrong really, really quickly. The transaction monitoring system doesn't catch phishing. Right. The onboarding system gets beaten quite easily by a deepfake. But how you use a device with a deepfake is very different to how you use a device when you're using a device. So these signals are really, really important, it turns out. Now imagine if you could see that across lots of different institutions. Well, Sardine can already do that within its clients. Right. But imagine if you could do it with Sardine's not clients, some of the largest banks. So we had an example in Sonar, which is essentially a data sharing consortium. What we say is we'll put all of our device data in there, and you can show up and just use it without necessarily being a Sardine client. So let's say I'm one of the very big banks in the world, and I don't necessarily want to buy from Sardine, but that is something that my compliance department can just pull in and deal with. And you can do that because it's capped for-profit membership organization, much easier to join, much easier to get through procurement. But the other thing you can do is put your own data in there. And if another bank wants to get data from you, they can see that, and they can see the Sardine data. And so we have companies like Square in there. We have most of the major crypto exchanges. And quietly, there are some very large tier 1 banks using it that don't want to talk about using it. But we had an example where one very large tier 1 bank was able to predict, I think, 43% of scams coming from crypto by partnering with the crypto exchanges that were in Sonar.
Wow.
And that's the power of sharing data.
Yeah.
And it's just putting the pieces together.
Yeah.
So now imagine having government in there.
Yeah.
Now imagine having supervisory tech in there.
Yeah.
So this is the sort of thing where it's just low-hanging fruit.
We would solve 100 if we built if we were able to work together as a globe and we were able to create some very obvious connections, we could solve 100% of money laundering in the world you just
Well, so here's the
described.
horrible thing about money laundering is it's really, it says jargon term, but it's human trafficking.
It's fucking terrible. Yeah, every year at this, not that I run the US show anymore, but like we would try to do something. Like, have you ever watched Trafficked?
Yes.
Mariana Van Zeller is like 2 years, her and Prove got up on stage together to talk about these things. And it's like, for some reason, like Joanne Barefoot, you, and like Nick Cook, like there's a small group of people that like understand, like, I don't know, that's a little pejorative, I guess, to say understand, but like emotionally feel it.
Viscerally.
It is one of the most important, if not the most important problems for us to solve in this industry. We don't talk about it much and we think of it as a buzzword, like you said. And it's like, it's crazy. It's humans. It's people's lives.
So the problem is the incentives in compliance are completely broken, especially around BSA AML, because it's the stick you get beaten with, because you can never do it perfectly as an organization. So you'll have a regulatory exam and somebody has a BSA AML finding against you and you can get fined, you can get a consent order, you can get whatever. And so the job is to make sure you've got a process in place. It's not necessarily to have that process.
It's not to solve it.
Yeah. But also you can't solve it because you need collaboration in order to be able to do it. So AML policy is just trying to catch needles in a haystack with an old technology. And the criminals know this. So state-sponsored actors, sophisticated organized crime, they have gotten very good at working the gaps in the system. And the problem is the amount of crime and fraud is skyrocketing and continues to skyrocket. So scams are becoming the number one issue in financial services. It's becoming the topic. And why is it becoming the topic? Because they're so cheap. They're so easy to do, and existing financial services regulation thinks that scams belong to the telcos and not to financial services. Or they think it's a liability issue that the bank should make you whole. And I'm like, well, the bank didn't necessarily cause it. It might have come out of, WhatsApp or SMS or an email but they didn't necessarily cause it. The human clicked it. So we need to put all of these data points together in order to make sense of it. Like, if you start thinking about how do I solve the problem versus how do I comply with the law, you get to a very different place. And you could argue that's somewhat utopian, but I do believe there are enough people in this industry that care about actually solving the problem as well as complying with the law. And if we can move that ball forward, then data sharing, privacy preserving data sharing is going to be a critical piece of that.
Yeah, I mean, coming back to the procurement thing, and I mentioned Nick Cook, but I think it was him when he was at the FCA, or maybe this was once he got to Alliance for Innovative Regulation, but it was a big thing that him and Joanne Barefoot were focused on, which was just the ability for the FCAs, the FDICs of the world, the regulatory bodies being able to test a technology, which is crazy. That you can't set up an instance to test with dummy data even as a governmental entity, and it seems like that procurement thing is, I mean, there's a whole bunch of mental models around, is it, complying or is it solving that? I agree with that completely, but it seems like the procurement thing
tipping point in the system. CEOs of banks now ask me what they should do to make a difference and go faster in an organization, and my answer is procurement.
Yeah.
Spoiler alert. Fix that.
Yeah.
But there's a lot underneath that, because procurement is not buying things. Procurement is all of the risks and policies that you have to pass in order to be able to buy something. So really, you have to understand the iceberg of procurement. And you ever seen one of those YouTube videos of how deep does the iceberg go?
Yeah, sure.
Compliance is the classic example of that. You think it's AML and you think it's KYC and you think it's all these things. But really, there's this global risk and compliance, and there's this audit thing, and then there's this sort of whole world of policies, procedures, and controls, and then there's running those on a regular basis, and information retention policies, and data protection policies, and da-da-da-da-da. All of that gets wedged underneath procurement, and procurement don't own that thing.
Yeah.
So how are you supposed to get anything through that organization when there are all of these policies owned by all of these different parts of the organization that all exists on a SharePoint somewhere?
That's the most depressing word, is SharePoint.
And nobody... Honestly, the hardest thing to do is to get anything done, or to figure out how to get anything done. because there's no simple answer. Unless you are in like a program management office that is delivering things and that has a team of people that deliver things and lock budget, if you want to do anything outside of the committed budget spend, you're completely screwed.
Yeah.
And actually what you need to be able to do is move like Nubank does and move like Revolut does. Because Nubank and Revolut and Monzo and several others around the world, they have banking licenses. They're held to the same standard as a lot of the banks. Maybe not quite the same standard as like the biggest banks in the world, but they're held to a reasonable standard. And in order to get there, they had to get their act together. But they don't do it the same way.
Yeah.
And that's the thing. I was speaking to somebody who was a very early hire at Nubank who said, there was an anecdote about, in the early days, their sign-off approach was probably not ideal. They would send a message internally in Slack, and somebody would put an emoji on it, and like that wasn't going to get them to where they needed to be with the regulator. Maybe it needed a little bit more governance with that. And I'm talking like before they even had a license or anything like that.
Sure.
And they realized they needed some more structure. So some more structure is good, and fintech could learn from that. But SharePoints.
Come on. Yeah. I think, and again, I mean, not everything we're talking about, but pretty much everything that we've discussed so far has been like, can we find a rational middle ground?
Like, story of my life, man. But like, do you ever watch Blade with Wesley Snipes?
I think I tried to at one point. It's been a minute.
You get the idea, right?
Yeah.
Like it's a vampire that can go out in the sunshine.
Oh, I watched the old ones, but it's been a long time. Yeah.
Daywalkers.
Yeah.
People who can live in both worlds, who can look at fintech and go, like, that's great, but you need to learn this from the banks. And who can look at banks and go, you guys do this really well, but you can learn this from the fintech companies. And again, it doesn't drive clicks to say that, but the sensible people in both worlds will accept that. And I think this is one of those classic examples where if we really want to move the ball forward on anti-money laundering and any of the big issues in the industry, we need to get better at data collaboration. We need to get better at large organizations procuring. And there are several other tipping points in the system where we could meaningfully make this industry better for everybody.
I hope, I kind of, like, at the beginning of this, you painted a more positive picture about the potential future of the Trump administration than I had really thought about. And I kind of wonder, like, we're talking about, like you said, a little bit of utopia, but I wonder if there's, shoot for the moon, shoot for the stars, land on the moon. Which way around it? Yeah, that way. I wonder, maybe that's where we end up in 6 years or whatever it is.
I just hope we don't get the ping pong effect of, and then we get sort of another administration that swings too far the other way, so that everything that happens over the next 4 years, you end up getting some sort of fine for and consent order for through regulation, through enforcement. Like, you might have done stuff that's wrong that deserved enforcement over that 4-year period. That might be correct.
Yeah.
But how do we have like a threshold that moves and kind of finds a balance where we actually try and pass the policy up front, we try and hold people to it, and then there's like a period of where people try and figure out whether they're going to be within that. And if you fall too far off the edge, then you get a thing. There was a thing that the FCA was doing in Project Innovate, which was no action letters, which is if you're inside this sandbox, we'll issue you a no action letter. The idea is show us everything you're doing, and we'll give you a no action letter. There was only so many companies ever went for that. There were several others that did that much more informally. They didn't. But what the best part of Project Innovate was actually the handholding. Like, if you're a small company and you couldn't afford to have an entire compliance department, you could go sit with the FCA and have a chat with them. And you had this constant feedback loop where it wasn't an enforcement discussion. It wasn't an examination. Because most of your experience of kind of being regulated as a bank is you're getting the
if
examination.
You're an ex-banker, you do not want to go in and have that conversation, probably.
It's an examination. And they're looking for what you've done wrong.
Right.
Whereas there's a different conversation, which is like, how are you doing it? Okay, have you thought about this risk? Have you thought about that? Where's that conversation? There's some work that I think the FS Vector guys are doing, the Coalition for Financial Ecosystem Standards, CFES, which is like FFIEC, but for fintech.
Yeah, I was carrying the two on the acronyms, but yes, I'm with you.
So how can we have like a standard for fintech that looks like how the way the banks are examined, the industry's doing this itself.
Yeah.
Because it's like, we know we need this whole industry to be better and to be doing things in a similar way. Now, if you can't pass a new legislation to do it, but there's this standard, could we not just adopt that? And where do you go to have that conversation? Hopefully, the new administration is one that's like, oh, cool. All right, you solved it for us. That's awesome. The private sector did something, and we like it. It'd be good if you added this, and we're worried about that. And actually, this doesn't catch that thing that we're concerned about. Like, maybe it's a conversation.
I hope it's a conversation. I love the direction you're going. The idea that, especially the American political system, is not just a ping pong and not just a very, very strong pendulum swing. I struggle to agree with. I think it is exactly that. I think
that's purely hope. But I do think that once you get beneath that, you got civil servants and operators. So fintech operators and civil servants like to talk to each other. And there's, funnily enough, over the last 4 or 5 years, a lot of people that have come from the government world now work in fintech. And they've gone from agency side. So they know how the government works. They have relationships in government. And fintech companies that were the naughty kids are now kind of, they've left school, they've had to get a job, they're sort of setting up teams, and I think they're getting their act together in a different way. So that narrative of like fintech can't comply is a little bit old, and there's more of an open ear in the rank and file because they recognize the person across the table as a grown-up now. So that's why I'm hopeful is not necessarily that the politics won't be a ping pong. It probably will. My hope is if it does become a ping pong again in 4 years' time, we don't just see this avalanche of enforcement actions and that we learn the lessons of the last 4 years where fintech companies, yes, you can do stuff, but it doesn't mean do anything.
Yeah. Well, I mean, I think the spirit of self-governance, for the most part, has been there outside of, maybe some bankruptcies and things that we, wish hadn't happened. But the other thing about it is, like, the political pendulum will swing, undoubtedly. But if the economy does well for the next 4 years, this last election, people voted with dollars more than they've, more the amount of times I heard, and the amount of times I heard, like, the cost of eggs is why, that argument is wild and interesting. But if the economy's heading in the right direction and politics is you want to be liked, you want to be, in the good graces of the world and society. Like, you're not going to probably go do a bunch of enforcement action on banks, I wouldn't think, just because of the political backlash. But I don't know.
I don't know if that's the top of mind thing in that world. Who knows? But
who knows? I think is the actual answer.
It's the top of mind thing is like, it's the economy, stupid. Like, if the economy is doing well, there's an argument though that like. We should go all the way for deregulation, and that great headlines. But actually, we'd been very aggressive with regulation, but we hadn't passed new legislation. And I think that's the difference. Like, if there are new regulations and it comes from a new law that is designed to solve a problem, and it's very clear what you need to do, the industry tends to react around that. But if you are just enforcing things, that's not a good outcome either. And you're out enforcing things without a clear mandate to do it. SEC.
Well, I was going to say it just openly without coughing. Like, the idea that Gary Gensler is gone is one of the best things for the future of innovation.
Well, and for consumer protection.
That's the irony, right? It's like the for consumer protection and for the sake of our industry being respected. Like, the amount of just like negativity that was heaped on to the generalization of fintech because of him, and it's crazy.
It's not solving the problem. That's my issue with it. When you're grandstanding like that, when you're doing regulation by enforcement, you might be catching some genuine issues, but you're also not necessarily catching all the issues, and you're creating a net worse problem.
Yeah, like, why do you need to send a Wells notice to fucking Coinbase? Like, I mean, there's good actors out there in this space, and like, let's admit to the fact that there's bad actors and let's go after them. But the idea that you're going to give a Wells notice to everybody that's touching crypto and then actually end up suing them is crazy.
Yeah, and that's why it went too far one way, and I hope it doesn't go too far the other way. What I see in this the financial services part of this administration, at least, is a recognition that America is the world's capital markets, and you cannot mess that up.
Yeah.
Do not mess with that.
Yeah.
You need faith in the institution of money, and I suspect it'll be quite sensible, unless the AI bubble pops, and then we're all screwed. And then the economy would go down.
Yeah, yes. If the AI bubble pops, that creates all kinds of other shit. Do you think any of these European near IPO fintech startups or UK near IPO fintech startups are going to do it over here at all? I mean, yeah, it's all going to be in the US.
Yeah. I mean, Nick Storonsky said on the Harry Stebbings 20-minute VC, like, why would I list in the UK? That would be bad. That would be irresponsible.
It'd be bad
to my
branding. Yeah.
Be irresponsible to my shareholders if I did.
Yeah.
Like, why would I do that? One thing that's interesting is I'm starting to see like Topco in the UK listed in the US. So Klarna has a Topco in the UK. I think Nubank's just moved its corporate headquarters to the UK, even though they're listed on the NASDAQ.
I didn't know that. Wow. Okay.
And that's because English common law is the most widely accepted, most compatible legal framework around the world. It's also considered the fairest. So you look at the lawfare that you see in the United States, whereas in the UK, common law, it sounds almost trite to say it, but it's based on common sense.
Yeah.
Like if the definition and society has changed, then a judge looks at it and goes, well, that doesn't seem right.
Right.
And they have like a lot more space to work within common law. And it's generally wild. It's the legal system that's used for most international trade. I think the UK has an opportunity to do something with that factor, but they need to make listing here exciting and interesting, because you could argue that maybe 10 years ago, but certainly 20 years ago, the investment bankers in the UK were where you wanted to be. Like the UK was right up there with New York, if not even a notch ahead. It's not true now.
Yeah. Well, it's not even close to true now, which is wild. Like, having met Lynn Martin, the president of the NYC, at the show at Vegas last year, like, you just, like, that woman could run for office and she could do anything. And you really, like, getting to know her, you actually do see, wow, the power of the capital markets really is something that, like, this isn't just like an American
But America is
machine.
The world's capital market, right?
Yeah.
Like that's the thing about it.
Anyway, I don't know even really what my point is there, but it's just this is gonna be a weird fucking 4 years. For the past 4 years I've been saying this is the most interesting time to be alive, and I disagree with my past self.
What's the old proverb? The curse, or the old proverb. It's curse.
May you live in interesting times. Yeah.
I mean, it's fascinating, but it's scary. I think if you're not scared a little bit, then you're not alive. But then good old committees and aging infrastructure and procurement, we're just putting enough grit in the system. Trying to solve those things is interesting, but they're sort of useful in their own right of slowing things down. If you really, really want to see that the sky is not falling, like this is where London's really useful. You can just go around and see like, oh, look, yep, things haven't really changed. You know, just touch. Yeah,
touch concrete, touch stone.
Because you can kind of get into this hyper online world and the bubble, the engagement bubble, that it sucks you in. It's like, oh, that's so huge. This is massive. This is unbelievable. But we're so online that all we see is that. We don't see that some things are universal and will last the test of time. And I'm just hopeful we don't go down a dark path. That's for sure.
I am too, and I actually have faith that will manifest into some sort of middle ground. And I'm curious, like, I have a perspective on this, but I'm curious on yours, especially as a father. I think I think a lot of folks are saying that this is a bad time to bring kids into the world, right? I don't know if I agree with that. Like, I think that this is actually with the decrease in the world population, things along those lines, like, it's actually maybe a great time, and especially a time to bring in open-minded, educated, like, to bring good kids in the world. Like, it seems actually, like, if we can just crack nuclear, fusion, like some just basic stuff in terms of energy, we're on a good track.
Yeah. I think we're going to go through a difficult patch.
It's going to get worse before it gets better.
Well, it's just going to look ugly for a while, and the question is how ugly. The best thing you can do. It pains me to say this, but the consistency of populations going up and outcomes being better. Maybe it's humanity as a virus, who knows? But we just seem to have better outcomes the more of us there are.
Yeah.
And you look at the economies that give me hope. It's sub-Saharan Africa. It's places like Nigeria where the entrepreneurial spirit is unbelievable. But even Poland, places where the birth rate is high, the economies are growing. These are the areas to really look to if you want to be excited. Like, if you want to be excited, go to either of those places. Go to a lot of the North Africa at the moment.
Yep.
Like, the energy is palpable because there's young populations that are digitally savvy. These are the people that will be leading the future. And so if you're in a declining empire and been in one of those for a while, you can tend to get a bit miserable. And you don't go to where the optimism is. So as somebody who's grown up in a falling empire and one that's now becoming a falling empire, welcome to the club.
Yeah, thanks.
We're not quite as powerful as you used to be. Don't get too angry about it.
We'll continue.
Just embrace acceptance.
Fine.
To raise kids in that, you want to give them the position to steer through it and to go to where the opportunity is and to where the hope is. And there's plenty of that in this world.
Yeah. And I think that's we were discussing before the cameras came on, the luck that you and I have to be able to travel and understand the world in a way that, if you don't, you can't. It's the only way to get it is to see it.
Have you been to Vietnam?
I haven't.
Wow, the energy.
Yeah.
It's
I've
one
heard
of the fastest growing
traffic
economies.
is the main thing I've heard. It's like they're likely to die crossing the street. But other than that, you're having a great time.
Unbelievable. They've got a tech ecosystem that's really burgeoning. Like, get out where the builders are and get to see what is coming tomorrow. I think the other thing we get in the Anglosphere is, like, and I know this, I produce a lot of content. I can't really write about that because nobody's going to care.
Yeah.
And so...
But this is the most interesting shit, though. In the U.S. and the U.K., like, everything we're talking about is fascinating because the world could burn, the world could go much better. Like, everything we're talking about is pretty binary, and that makes it fascinating, and that makes it a TV show, right? But my brain is so fucking tired. What was I just about to say? Vietnam. The exciting, like, talking about banking as a service regulations in the U.S. was sexy because there was evil and there was good, right? Like, it was easy to kind of classify those things, and that's how people's brains. But like, the solving a problem in sub-Saharan Africa is a lot more fucking inspiring, right? Or Latin America or whatever. Like,
it's also a lot harder.
And yes, but there's also, like, the roads aren't built yet.
Yes,
so you get to build. Like, it's harder, but the opportunity set and the expansive nature of your potential creativity is so much broader.
I mean, if you look where the adoption of stablecoins is, it's all in sub-Saharan Africa, it's all in Latin America, it's all in those places, it's all where there are no roads. If you look at where Starlink is being adopted, it's all where there are no roads.
Yeah.
And so this is a different type of infrastructure that's skipping generations of legacy infrastructure that it just doesn't need to deal with, and legacy regulation that it doesn't have yet. And of course, things will go wrong and they'll introduce their own regulations. But on the way there, they'll create massive amounts of economic opportunity. Everybody got excited about Bridge being acquired by Stripe. What they didn't get excited by was that the biggest customer is Starlink, and the reason Starlink is so big is because it's these markets where people have stablecoins that they can pay for Starlink that's getting them access to high-speed internet that they never had before in the village. That, to me, is the story that nobody told about Bridge. I didn't even write it. I think I mentioned it in a byline. But that's the stuff that gives me real excitement when you start to see the impact of the technologies behind the headlines.
That is why the show is called Everything is Fintech.
Yeah.
Like, literally, and that's the cool shit, right? Like, I mean, again, talking about banking as a service it's fun, right? And we do it, and it's a thing, and we will continue to do it probably. But a stable coin paying for internet, giving the increase in access, like the actual changing of people's fucking lives with these technologies is the exciting part. And I hope, I feel lucky that the show actually is going to Asia next week and week after that, to Thailand and Singapore, and we're going to do some interviews there. But I hope I hope that there is more of a global view, especially as like America becomes more nationalistic and things like that. But you've given me a little hope.
It's my purpose in life, my friend. I'm. Somebody once called me the corner street preacher. You know, I'm here to tell you that it's all better. All you got to do is believe.
I like it.
And look, unless you're believing it can be better and working to make it better, then it's never going to get better.
Yeah.
So, like, keep working to make it better. And the thing that not many people do, a lot of people get angry at regulation. Very few people write the comment letter.
Right.
Very few people, having written several 20-plus page comment letters, I should probably not say this too much, but I'd like help. You got to.
Yeah.
Because here's the thing that nobody knows about inside a government is somebody's reading all of those. And it's a human being. It's not even Gen AI that's doing it because they can't use the Gen AI.
Yeah.
And that, if you can know that if you knew that comment letter you write about that banking as a service regulation is going to get read, maybe that changes your perspective on whether or not it's worth writing. Because I think we believe so much of working with government is futile. And yeah, it's painful at times, but it's also a lot of folks where I keep living this movie in my life where I walk through the door of a room and I think I'm going to meet the really powerful people, and they're looking for somebody else to help them. And what you realize is no matter how many of those rooms you go into, everybody you meet is looking for that next person that can help them with the problem they've got. And their problems are all different. I remember early in my career, it was one of the C-suite of a bank I worked at the time. Walked around, and the first thing they said to me was like, "Do you know how to get something done?" Because they said, "I keep walking around saying yes to people, and I can't get anything done. Like, I approve it. Yes, the budget. What button do I push to get it done?" And so that's the frustration. But when you're early in your career, you're like, "Oh, those senior people, they just never say yes to stuff," and you get this like just log jam that happens somewhere in the middle. And unless you go talk to people and figure out how it all works and the complexities of it, and you're just relentless, you'll never get it done. So keep pushing.
Keep pushing and keep learning, I think, is the other thing, right? That's what, I can't remember if we were recording or not, but we were talking earlier about the ability to actually know everything about this industry.
It's impossible.
It's impossible. And that's what's fun about it, right? Like there's other industries that you really can understand quickly, and that's that, and okay, that was fun, now I'm an expert. Like, being an expert in fintech, from my perspective, is, one, you're not actually an expert, even if you say you are, and two, it's actually just asking the right questions. It's not knowing stuff.
I think maybe an expert is something people call me, but it's not something I identify with. Yeah. Insofar as there's just so much more. You've got to always be finding more, and you've got to stay curious and be willing to learn. The hardest thing I find as well is, as you reach positions of power and you get older, people look to you as an expert, so people feel like they have to live up to it. And also, your brain elasticity decreases. And so what happens is you've got a lot of experience, and that experience is really useful. You have experience, and you've seen things that the young kids haven't.
And then it becomes set in stone.
And most of the time, you're right. That's the worst thing about experience. But you've got to be willing to be wrong. And so maintaining, I think Frank Rotman at QED is amazing for this. There is a guy that can explain meme coins, but can also explain the intricacies of compliance with any compliance officer in the world.
Frank's probably the closest to actually knowing everything. Like, I don't think I've ever asked him a question that he didn't have a actual encyclopedic knowledge of.
At least a thoughtful perspective.
Yeah.
Because he really, really works hard to learn.
Yeah.
And you can see the work that he's put into it. But the reward, this is the thing I didn't realize, is the reward for learning is just these constant moments of like, oh, that sort of payoff. When we're young, we love playing and we love laughing and we love all of these things because it's a really crazy way. It's an incredibly effective way to learn. And the human brain just loves it. It absolutely is addicted to it. The way we do it as adults is a little bit different. But somewhere in school, learning becomes a dirty word. It becomes this horrible, like, rote learning thing. But if you find something that captures your interest, it's just endless. It's like
dive in.
Fintech for me, I'm like a cat with a ball of string. I just can't let go.
I'm so glad this thing got invented and somebody decided, and I don't know who it was. Do you know who invented the term? Have we ever decided that? Whoever put the two together?
I remember it popping up in the early 2010s. So I would say the first time I really saw it was Cybos 2013. Was it 13? No, it would be, it must have been 2009, 10. Yeah, it'd be Cybos 2009-10. It was one of the first years of InnoTribe at Cybos. So Nectarios and Dave Birch and Chris Skinner and all those guys were live tweeting from InnoTribe at Cybos. It was either the first or second year they pulled it off, and they were talking about fintech and finance and tech. That was the first time I remember seeing it. So I don't know who the originator is, but I was following that on my BlackBerry at the time.
Yeah, it's wild.
Yeah.
I'm going to give it to John Zanoff just because.
Because John Zanoff.
Because it's John Zanoff, exactly. Yeah. Simon, I think the team's going to kick me out. I know you need to go do another podcast. Thank you, my friend. Good
Thanks
to catch up.
Me.
Always a pleasure. Fun. We'll do it again soon, and we'll see where we land in terms of the things we discussed.
Have optimism.
I do after this. I'm glad this was the last one of the day because I'm actually leaving on a not giving up on the world note.
Hope is a choice.
Goddamn right. That's a beautiful place to leave it. I love you, man. Thank you.